Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your Stock Mentor, Brian Johnson, and it has been a while since we did a video, so it's time to do another. I've been doing a lot of updates to this website, and there's been a lot of other things going on, so I have been out of contact for a while. But I think I can get back on a more regular schedule. I thought I was going to be able to last week, but now I really do think I'm going to be back on a more regular schedule for you guys. We'll be able to do 2, maybe 3 videos a week. If you do enjoy these, think about the subscribers newsletter. I do those every day. Even when I'm busy, I still do them. So the only day I don't would be Saturday. So if you enjoy these videos, there's just a lot more lines, there's a lot more information, there's a lot more things I discuss. I discuss a lot more indices. I talk about just gold and the dollar and just a lot more involved with those videos. They're about 15-20 minutes long each day. And well worth your time to invest in something like that for your trading future. Another thing to keep in mind is I'm also looking at some new things. I have my mentoring that I do as well. Very crucial to anybody that wants to make this trading thing a longer term deal rather than just a short 2, 3, 4 month stint before you lose your money. If you're having troubles and just can't seem to make consistent profits, check into that. And the next step down the line is looking at potentially opening up a trading room, which I have talked with extensively with my subscribers. Now I wanted to bring it to your attention. I have had some responses from some of you, but if you would be interested in something like that, send me a quick email telling me a little bit more about the details, and then I'm going to have them done here in the next day or two, and I'll send them out to you. I'll make sure you're on that mailing list so you can decide whether or not that would be something for you, and that would be something we do every day. We'd sit around and talk about the markets, give you ideas for things to look at during the course of a day. I think it'd be a very good opportunity for a lot of people that have time to trade and just need a little bit more extra direction for one thing or another. And it's not kind of nice. Trading can be a very lonely business, and this would allow everybody to kind of be in a place where they could chit-chat about things, and I think it'd be a lot of fun, actually. All right, so on to the charts and where we're at. 12,200 is the place where the Dow seems to be stuck. So as you can see by the chart, we came up from last week, a little bit of what everybody's considering the bounce. I think there's good potential for that. I'm not convinced quite yet, but I think there's the potential for that to be in the unfolding as it stands right now. Pretty decent move so far from the 11.9 area back up to the 12.2. But notice that we are still struggling with this overhead level here at 12.2. A little pullback today, coming into some lower levels. There was also some extra movement in the after hours where the futures themselves fell even a little bit further. My last print on the Dow futures is at 12.028. You'll see that we closed at just above 12.1, so it was quite a bit of a move there in the after hours, and pretty heavy volume coming in on that. Whether that'll stick into tomorrow's anybody's guess. We could probably Elliott wave this at 1, 2. I would consider maybe all of this a 3 wave. Now we're into a 4 with a potential 5 up. That's just one count, just one idea. So keep that in mind coming into tomorrow, especially with pushes up and over this area. I think we have that verified at that point. From a daily 2, here's that line I've had drawn on my chart for quite a while, showing the 12.2, what was supporting things back in here, has now started to become resistance. So we're holding here at the 12.2 area, back below the 20-day moving average. We'll see if it wants to duke it out with that 20-day over the next couple days. The weeklies here are going to be important as well going into the end of this week. But you can see the run up right into 12.2, pulling back today from that area. NASDAQ 60-minute doing the same type of thing with this overhead area being around 22.55 to 22.60. You can see also some good staunch, what should be good staunch, overhead resistance at 22.65. Be watching that tomorrow. Falling back into some of these moving averages here. I still like the 1, 2, 3, 4, 5, maybe A, B, C. Now we're starting to way back down. We can do this all day long. Elliott wave can be counted about a billion different ways. That's why I only use it as confirmation, not indication. One, two, three for the time being on the NASDAQ looks pretty clean, if you ask me. This is the NDX. That is the 100 strongest NASDAQ stocks. Going into the daily, you can see we broke back above the 200-day moving average in a big way. NASDAQ leading all indices yesterday. That's good if you're bullish. You'd like to see strength coming back into the techs. Today, however, coming right back down, but closing yet above the 200-day moving average. Some of the other indices not struggling with their 200 quite yet, but they are struggling with their 20. So it'll be interesting to see how the NDX reacts when it does, and if it does, make it back to this area here. The weekly, also the NDX coming back into very staunch lower support. Can you see how well this line has held? I've had that on there for, I don't know, umpteen months now. Anyway, point being, holding very nice right in through here. That blue line has shown us we got not only the break and the close, but also staying power by the bears below it, dragging for 2 weeks down, down, down into these lower levels where it has met this strong support. This is what the bulls will want to try to hold by the end of the week. Remember, this is a weekly chart. We don't know where this is going to end up until Friday bell rings. Let's see if it'll hold this area here as we enter Friday. SPX 60 minute also looking like that little 1, 2, 3 type of move on the Elliott wave side of things. Breaking up and into the 1295 to 1300 area, now back to rest at this, what was some previous overhead resistance. I really need to thin this line out. It's not all that strong to me right now. But if this wave 4 is in effect, we should see it stop somewhere down here between 1280 and 1285. That would be my mark for a wave 4 to the downside. Anything below that would kind of make me a little bit more on whether or not this thing was going to be able to break out and up to new highs. Watching, of course, these overhead levels sitting at right around that 1300 mark, and obviously the 200 period moving average here. Now remember, this is not the 200 day as it was on the NDX. This is the 200 period moving average on the 60-minute chart. Different places, different things. As we move to the daily, you'll see the SPX has already tested its 200 but did not break below, nor did it close below like the NASDAQ did, like the NDX did. It managed to hold it. This was just a beautiful bounce area here. Look at how perfectly that worked out. So important to have your lines in the right place. Can make things a lot easier. So a bounce off this lower support and this 200 period moving average gives us that move to the upside, but what does it stop at? Where does it struggle? The 20-day moving average. This is why I'm telling you to watch that on the NDX as we move forward. Still overhead areas of 1300 and of course 1307ish or so, 1305, as seen by the 200 period moving average on the 60-minute chart. The VIX staying up and over close to 19. You know I'm big about it staying above the 19 area. 18.5 is pretty darn close. I'm not going to argue a little smidge here or there since we've been above it now for 1, 2, 3. You can see about 4 days in a row before we finally came back down into some lower levels. The weekly looks a lot worse here for the VIX as you've seen the panic, what was the appearance of panic coming into the markets the last 3 weeks. Now, a little bit more on the complacency side. People are looking at this as a potential bounce. So as it stands right now for the week, we're kind of back into these lower levels. It's not super low levels, though. It's close enough to 19 where we could still finish in and around that 1920 area by the time this week ends, depending on what this move does. Will it move back down? Will it move back up? Looking to see if it's an ABC or 1, 2, 3, or we could do the Sesame Street alphabet thing all day long with the Elliott wave. Just keep in mind, waiting for this to close at the end of the week. That would be Friday. FAS showing us the financials and where they're at right now. They did make a break out and over this area here, but could not hold it, coming back into this resting area. Looking at this as a potential double bottom, just no confirmation yet on that break or the fact that it is a double bottom. Just stuck in a consolidation right now. And what is it struggling with? Really trying to struggle to hold and stay above the 20-day moving average in the FAS. The FAZ looks, once again, a little bit more clean. As you can see, I should extend these lines. It's been a while since I've done them, so it shows up a little bit nicer on the daily. But anyway, I'll extend these lines, kind of show you where we're at right now. But you can see where this has been slowly falling, but the fall has been, how do I want to say this, organized. That's the best word I can think of. very organized pullback so far in FAZ, which means overall potential more bullishness down the road. And from a daily, look what we rested on right here on the 20-day moving average, putting in a huge hammer type candle right at and on the 20-day. So it's holding that. That's big for FAZ. That's good. Yes, you have to look at this as somewhat bullish. Yes, that is a hammer candle. Doesn't guarantee you a move to the upside tomorrow. Be careful with that. Be careful with that. Don't get fooled by that. You need some extra oomph. I like the 200-day rolling in through the top here. That would be an area to look at above that. And then back below, really, this lower blue line for me. If we see it fall below the blue line, I think the financials could be in some trouble here. I'm starting to see more mortgage rates are starting to come down again. I know there's been news about housing market isn't selling as well as it has been. We'll see if that affects the banks and their ability to make some profits, and their perceived ability to make profits. That's actually more important. That's the perceived ability to make profits will make a huge difference in where we see the FAS and the FAZ go over the next few days and weeks as we continue forward. Keep in mind, holding the 20-day is good. Big hammer candle. Look for some confirmation tomorrow. I'm not sold on this as being uber bullish by any means right now, but something to certainly watch coming into tomorrow's trading. All right, you don't see Apple. Apple has been moved to the subscribers video. Got a lot of people on my subscribers list that are very interested in that, so I follow that from the subscribers video now. That now, of course, on an everyday basis. So if you like to trade Apple or watch Apple, definitely worth your time to invest in the subscribers newsletter. $28 a month at $1 a day is pretty cheap to get some extra advice on a lot of this market movement. All right, we'll be back probably again maybe Friday. I'm out of town this weekend for a softball tournament, so I may or may not have time to do a daily video. So maybe Friday. If not, we'll definitely see you again next, maybe Monday or Tuesday. Talk to you then. Bye.